credit bureaus use consumers' data all the time without their consent, right? And like, the practicality is we don't own our data in certain ways, right?
Sure.
And
Yeah.
but people think they do. They think that though this data is mine, it shouldn't be sold. And I want to walk through that a little bit and see what like comes up for you as someone who's worked for the credit bureaus, worked with the credit bureaus for decades. And because a normal consumer like me, we don't understand it.
Yeah. And yeah, I think for many consumers, this is potentially a confusing topic. So, first and foremost, data gets shared with the credit bureaus primarily, and I won't say all the way, just from lenders, right? Lenders are voluntarily furnishing this information. So when you as a consumer gets into a relationship with Citi or Discover Card or any number of lenders,
Mhm,
that lender is voluntarily furnishing that information to the credit bureau about your payment history, your balances, how many trades you have,
mhm,
and all of that data use is regulated under the Fair Credit Reporting Act, right? So a very important
mhm.
component. But then you also have, and some, many of the bureaus have expanded. They started out with credit data as the focus, but now they've expanded. So they provide data to insurers and they get data from insurers, rental data, utilities, right? We kind of had touched on this before. And some of that data is, again, it's being voluntarily provided by, someone you might be doing business with as a
Right.
consumer. Now, many lenders, well, I shouldn't say many, all lenders really that are reputable and, are doing things correctly. When you go to fill out a loan application, you are actually consenting to your data being reported to one of the three major credit bureaus. So if you haven't noticed this as a consumer, make sure you check that to make sure you're comfortable with the fact that, yes, they are going to report this information. Not just late payments, right? They want to provide your credit balances, how much your credit line is, et cetera. Now, ultimately, this information kind of overall helps the credit ecosystem. So it's important kind of to the big picture of the credit ecosystem. So the next time you go get a loan, that lender has a good view of your credit information, right? It's better than, I will say, subjective underwriting, right? So if we don't have this information available, you want to go get a loan, then a lender is making a subjective decision on you, which really isn't good for consumers.
Yeah.
So, yeah.
So what type of information? You mentioned, your payment history and your balances and your insurance and various things like that. Is your age being shared and your zip code and your the average demographic, like are all those things being shared in this quote file?
Yeah, and that's the way that the credit bureaus have to be able to, so if a credit or a lender is providing a new file, they have to be able to match to the existing record of you, right? So all the bureaus have what they call header records.
Hmm.
And so it has your name, your address, your date of birth, your social security number, right? Which is why you have to provide it on a loan application. All of that, and that's housed in a separate file, separate from all of the credit data. And they go through a matching process
Hmm.
so that they know, Phil Tyrone comes in and we've seen him before. We can match his header and then see what all of his credit information is. But there's never that mixing of the information because that is actually a fair lending,
Now, what
kind
do you
of
mixing?
violation.
What do you mean mixing of the information?
Mixing kind of what we call personally identifiable information
Okay.
and the credit data, those are not housed together in the credit bureau
So
because
when
they
you
want
say
them separate.
so
Yeah,
so personal identification number would be like a social security number and how many late payments they've had.
right. Those in the data itself are not tied together. So, like when a lender requests your credit bureau report, they go find, your header information, and there's a unique key that identifies you, and they go find that unique key on the data file with all of your trades, your late payments, your
Mhm.
credit balances, et cetera. And the point of that is, again, they don't want anything nefarious to happen. And there's rules and regulations with when a lender is using data for analytic purposes, right? You cannot match back to a consumer. That's an, according to the Fair Credit Reporting Act, because then you would have the possession of a credit report which you are not having permissible purpose to
Mhm.
have, right? So there is this concept of permissible purpose. When a lender pulls a credit report or someone uses your credit data,
Mhm.
they have to have permissible purpose to do so.
Yeah. So we'll get them permissible purpose
Yeah,
because that's an important thing,
it's an
especially
important thing.
with the Consumer Protection Board and what's happening under Trump with that. But
Yeah,
before we get there, like I'm
yeah,
trying to understand this whole concept. You know, you get these people, these list brokers that are buying lists of people. They're buying names. I want everyone with a credit score under 620 or under
yeah,
650
right.
with
For
this
marketing
much
purposes, for example.
debt. Like I've
Yeah,
seen those files come in
yeah,
and they have the name. They don't have the social security number, the name, the address, the phone number, their debt.
right.
Like, is that like, what do you mean they're not combining?
Well,
Like,
no, no, I just mean they're not housed
oh, okay,
together,
okay, okay.
right?
So,
So,
so you're
so,
saying, okay, so the bureaus have to house it differently, but when they sell it, they
but
combine
they'll
it.
pull it together. Yeah, they'll
Okay,
pull it together to sell the file, right?
okay. So,
So, yeah.
yeah. So it's a little technicality, right?
Well, it is, but like the point being, as a consumer,
Uh,
inherently, like, is the concern with the credit bureau or with the companies using that data to do these things, right? Because the risk arises
right.
when the company is pulling the list or using the list to do some kind of a marketing campaign, right?
Yeah,
Now
right.
you can now again, there's a process by which a consumer can opt out. You can
Hmm.
opt out of marketing campaigns. You
Hmm.
can
Right.
say, do not provide my information to your affiliates, do not provide my information for marketing purposes.
Hmm.
That's part of the consent process, right? So that's why every year you get a privacy notice and an opt-out option from the lenders you're doing business with.
I gotta
Now,
tell you, I can't remember any of those coming in. Like
really?
personally. No, I mean, me, I don't, I mean, no, I don't, can't remember. I mean, I have credit cards. I don't
Yeah.
remember getting an email saying, "Hey, this year you want to opt in or opt out." Like maybe it's come, but
Well, then that's on the institution, for
yeah.
for not providing a better message to you on that front, because those
Well,
are options,
but see, that's the thing. I mean,
Yeah,
like the messaging of the institution, it's sort of like, "Oh, please accept the following terms and conditions." And it's like 20
17,000
pages.
pages.
It's like, of
No,
course, no one's reading it, but I get it. I mean,
yeah,
I get what's in. So the practicality is people think they control their data or they have the right of their data. But in practicality is when you have a credit card, when you apply for a loan,
right.
whatever it is, you're relinquishing that right in the terms and conditions. And that's just the way it is, the
In
practicality.
essence, yeah, yeah, and that's what allows for this ecosystem to work.
And it stays there forever.
Well, yeah, and it depends. If you go dormant, right after 7 years, your credit history is deleted. So if you don't, if you don't
Mhm.
go have activity and stuff for a certain period, because we see this a lot in older generations, they might
Mhm.
not have needed credit for many, many years.
Mhm.
And so like bad payments, your credit balances, all those things, after 7 years, they're gone, right?
But
So
but the sad thing about that, if that's the case, then you're actually a higher risk because you're a ghost.
yeah, you almost look like a new to credit consumer
Yeah,
if you need credit. That is
right.
definitely a challenge. Yeah.
Which is a big deal when you're getting a home loan or a car loan or something like that.
Absolutely. Yeah. I
Yeah,
mean, you almost look like what we call a credit invisible consumer, right? You don't
yeah,
have any credit history, but you might have been very active, you know, 10 years ago,
yeah.
right? But the reality is a lender they have a hard time deciphering your risk. If you were active 10 years ago, they very much look like somebody who hasn't had credit,
Yeah.
because 10 years is a very, in credit history, you're looking at the last 2 to 3 to 4 years
Hmm.
typically. Those are kind of the most relevant,
Hmm.
right? And the longer time ago type of activity is typically not as weighted
Hmm.
in credit scoring models, in risk strategies, et cetera.
Yeah. But Matt, where's the danger here? Like where's the danger? I mean, you can get some institution to buy the data. Like it's so easy to buy. I mean, with list brokers, everyone's hawking something, and it's shocking to see what you can buy. Like I told you, I want a credit score of someone under 620 with 30,000 debt, whatever it is, right? Where's the danger here?
Well, I think for a consumer, right, there's the concern of getting bombarded with offers that they don't really want. Um, I think there's a component, obviously, of now when a bureau is providing that kind of a file, there are info security, processes put in place. It's, secure transfer of information. Oftentimes, the bureau might even execute a campaign for one of those list brokers, right? So if the list broker says, "Give me people that fit this criteria,"
Right.
you know, it may never leave the bureau's walls, but as the consumer, you don't know, right? And that's kind of the danger. Like, you don't necessarily get a good feel of like where is your data going and where is
Mhm.
it being utilized.
Yeah.
Um, Now, I will say, there are tools available for consumers like credit freezing, right? So, and now that doesn't stop maybe a list campaign, but it will prevent someone from pulling your credit and gives you some sense of control back over, the use of your credit.
Mhm.
And of course, we've touched on this before, but the ability to dispute, right? So making sure your credit file is clean and disputing the information, in my mind, right, as a consumer, that gives me some sense of control, at least over pieces of my data.
Right.
But to your point, you're kind of waiving some of that right when you enter into a financial arrangement with a lender or a bank or a financial institution, and
Yeah.
that's one of the unfortunate sides, you know which is why I actually think the whole concept of open banking and providing the ability to provide your cash flow information,
Yeah.
that actually shifts the power back to the consumer. So I think there could be a lot of interesting movement in that way, and as lenders continue to accept that as viable data to assess risk,
Mhm.
now I as a consumer can say, I only want my data going here, here, and here, right? it,
Mhm.
it changes the dynamic, which I think could be very interesting.
What, this concept of sharing the data and sharing it securely. I'm
Yeah.
surprised how lax that is in reality. I've had people
How so?
say, well, I've had people say, "Oh, I'm gonna send you this file and I'm just gonna put a password on the Excel file." I'm like, "Well,
Mm,
what's in it?"
yeah. That
I mean, I'm like, "No, no, don't send it to me."
Don't send it
Right?
to me to start,
Like,
right?
do not send it to me. And
Yeah.
but like, I mean, it's just, and I don't mean to say that from a bureau perspective,
No, no,
clearly,
no, just in
but
general,
but
right?
I'm
Yeah.
talking in general, like with these list
Yeah.
brokers, right? These list
Yeah.
brokers, they just operate differently. They're like, in
They have
many
a
of them,
different mindset about
they have
it,
a
right?
different
Mm,
mindset. It's
yeah.
like a car salesman. Oh, here, let me get this to you. Oh yeah, you're gonna get this. I mean, I've seen them.
And it's
It
moving
shocks
volume, right? That's what they're,
moving. We're like a million records, 500
yeah,
records, 500,000 records, and it's just sort of like they want to make that commission.
right. Right.
I mean,
It's
what
that
would you
is
say to that?
Yeah, so that actually is stuff that concern as a risk practitioner for 25 years, right? Like clients I work with, I mean, we are very cognizant of things like, hey, do not have personal identifiable information available in any files that are going, unless we're, as an example, I'll give you a hypothetical that is real. But let's say, I'm putting out data. I want to do a study about my loan book, right? So
Mhm.
working with the credit bureaus, that's where you have to send that personally
Right.
identifiable information. Even within clients I work with, and this is just to give the consumer some comfort. In lenders themselves, they house this information separately, right? Because they don't want to violate the FCRA. Because the point being, and when I get credit data back, I can't, it has to be anonymized. I
Yeah,
can't
right.
identify Phil Tyrone, right? But when we're transferring data to a bureau to do a retro study, for example, it is through very secure channels,
Right.
SSTPS encrypted, all this stuff, right? But like, I would say on the practitioner side, like aside from maybe this list broker, maybe kind of the fringe side of like financial services, I would say in general, people are very cognizant of not sharing sensitive information. I mean, because
Oh
many
yeah. I mean,
people in those roles are consumers themselves, and they say,
yeah.
I wouldn't want my information
Well,
provided in this way, you
yeah,
know.
and I think it's fair, like these large companies get it, but the
Yeah,
practicality is
there
it's
is a chance.
there's a
There is a
yeah, and
chance,
it's happening. And this
and
is
it's
why
happening. Yeah.
you have to review your credit report. You got to keep an eye on it.
Oh,
This is where the
100%.
identity theft happens, and
Yeah,
especially with AI, it's all over the place. Like it is, I've
absolutely.
had Venmo and I've had PayPal frauded up in the past 6 months with me
Right.
personally.
Right. Yeah.
And I mean, and it was shocking to me how they got in, and it was the same exact thing after I reported it. Yeah, well, I
Wow.
won't get into that long story, but my point is it's important to watch that. Okay, let's circle back with permissible data. Okay.
Yeah.
Consumer Financial Protection Bureau, the CFPB, really powerful under the past administration, or much more
Yeah.
powerful, right? Trump's practically like, I don't know, it's shelling down significantly.
It's cut them off at the knees.
Yeah, I
Yeah.
mean, it's like, so this whole concept of permissible data, it once again is a red flag for who's really getting the data, who's not getting the data, the right people getting it. I mean, I know it sounds good, permissible data, but
Yeah.
I mean, like, no one's watching it.
Well, yeah. So I would concur that from a regulatory standpoint, there is concern that there is just not, people, one of the things about the CFPB and the intention of that agency was to support consumers, right? It's in the name. And like its intent was to help protect consumers from bad actors and bad practices.
Mhm.
Permissible purpose that's goes well before the CFPB was ever stood up.
Mm,
It's part of the FCRA, right? The Fair Credit
got it.
Reporting Act. So I don't envision a world, even if the current CFPB says, you know what, we're not going to crack down on people who are not following permissible purpose.
Uh-huh.
First of all, I don't know that the credit bureaus would be comfortable just providing data unless there is permission. I mean, they have built not only like philosophically, why they do this, but guardrails, and like there's processes set up to ensure that like you, Phil Tyrone, can't just go pull someone's credit report for
Yeah.
fun,
Oh, for sure. You're
right?
right. You're
Which,
right.
which would be a violation of permissible purpose. Like that is, for those that aren't familiar, what that means is I have to have a definite purpose to go get that credit, and I have to have your consent as a consumer.
Mhm.
Now, again, there might not be as much regulation around this or people cracking down. I don't envision a world where lenders would kind of just bypass it, or the bureaus would allow it to happen. It's just there is just too much risk to the system to
Got it.
just allow for that to happen. So as a consumer, you should rest assured that your data isn't just going to be flying around willy-nilly,
Mhm.
um, or just because someone says, "Hey, I want to pull this credit report," right? That is not going to happen.
Okay. And if someone wanted to sort of like opt out, like you mentioned, like we're one, you look for the privacy policies you mentioned.
Yeah,
Two, you maybe a credit freeze, but that's sort of like very impractical. And it's like an overkill in a lot of ways, right? Do you agree
yeah.
with that?
Well, yeah, I think it's good, just a generally good protection for consumers
Mhm.
if, to prevent fraud, or especially as we've seen this increase in an identity theft. And
Mhm.
I think with AI, it does create, in my mind, a little bit more concern about the ability to spin up these fake identities and steal people's stuff. So I think it's generally a good practice to freeze your credit just to ensure that like no one can access it without your permission.
Mhm.
Um, it won't necessarily prevent that opt out, but you can contact the bureaus and say, opt me out of market. You can be put, and they go through a whole process when they create these campaign lists, or like for these list brokers, they actually bump the data against what's called an opt out file. So
Got it.
that there is a consumer on that opt out file, they're
Mhm.
not included in the list, right? So as a consumer, you can be proactive and take action, and ask your lender, because a lot of lenders, what they do is in the language they
Mhm.
provide, they have affiliate networks, right?
Mhm.
So a lot of these banks and fintechs have relationships with each other,
Mhm.
and when you provide, or when you give them consent to say, yeah, you can share my data, okay, now that means Bank A can share your information with FinTech B, and now
Right.
FinTech B can market to you.
It just spreads like crazy. Yeah.
It spreads, yeah, and it has the potential to be, all over the place. So opt out, contact the bureau, ask to be put on the opt out file, talk to your lender. And when you do it at the lender, they will inform the bureau, right, that there's an
Right.
opt out
See
request.
that
Um,
I mean that's where it feels a little slimy, right? Because okay, it's not like TransUnion's trying to hack the system, but they send it to A and then affiliate A, B, C, D, E get it. There's got to be breakage. There's got to be. But we'll find out. I mean, that's why we're having this conversation. And
sure.
let's just hope that their opt-outs are better than the do not call list
Well,
because the
yes,
do not
because
call list
that was an
is such a
absolute
joke.
failure.
Oh my God, brutal.
Brutal. Yeah.
Okay.
Yeah.
Matt Komos, OGMA Risk and Analytics. Thanks, Matt.
Thanks, Phil.